All right, well, there is a live look at what's happening in trading in Canada and the U.S., and while it is a bit softer in New York, and we know that the Canadian technology stocks are taking a bit of a breather this morning, a nice rally in our materials stocks seems to be helping continue the gains that we've seen for the Toronto market. We're above 26,000. So if you're keeping score, we're looking at a market that has continued to reach all-time highs. And for some more perspective on the mood of the markets, let's bring in David Nelson. He's Chief Strategist of Belpointe Asset Management. David, it's nice to see you. And I guess I just want to start with the fact that the Canadian stock market has been rocking and rolling here. It's interesting on a day when investors are taking some profits in tech, which is a smaller part of the index. Their love affair for some of the gold stocks seems to be getting us up to record levels here. What's your take on how overall investors have positioned themselves in 2025?
I don't think gold is really all that surprising. You know, I think investors look at, you know, what's happening in capital markets and they see what's happening in particularly U.S. Treasuries. And the idea that the United States is still running debt and deficits that are pretty large. The world notices that, and so gold becomes a pretty attractive asset class.
And, you know, in a year where, I mean, this new headline north of 26,000 for the Canadian stock market will probably get people wondering about, you know, in a year where there's trade uncertainty for Canada and economic uncertainty, the fact that the stock market is at all-time highs. What's been your general sense on the money flows, the idea that even though the U.S. stock market has bounced significantly off its lows, but this has been a year that investors have looked outside of the U.S. for some equity returns?
I think it's mostly a valuation call at this point. The United States, U.S. markets, certainly from a technology standpoint, they're the gold standard. There's no question about that. The world needs U.S. technology. I don't expect that to change. I think when you look at U.S. markets, you really got to separate it out because the market cap weighted indices are really a handful of stocks, maybe 10 of them. And maybe some of those are pretty rich, and maybe some like Apple, where maybe the business models are struggling. But underneath the surface, I'm not having any trouble finding a lot of stocks that meet my criteria.
Well, let's talk a little bit about your criteria right now. I mean, how have you been viewing opportunities out there? I guess if you went to the lows of April after Liberation Day, there were some former winners that were looking really beaten up. Since then, you've seen obviously a big swing back towards some of the momentum stocks. You keep pretty close tabs on tech. What's your current mood?
You can't paint them all with the same brush. You know, some of these companies are going to be with us for some time. I thought we had some good news from some of the Mag 7 stocks. I thought Microsoft's quarter was outstanding. They had 35% growth in Azure. About 16 percentage points of that came from AI workloads. So the idea that AI isn't going to drive the markets, that is short-sighted. AI is certainly the most important technology shift I've seen in my lifetime. I expect that to continue to expand. I think we're all using it. I've literally, at least here at Belpointe, I've got 3 or 4 David Nelsons, you know, kind of doing my work right now as I use a lot of large language models to digest a lot of the research. And I think we're all starting to do that. So I don't think we know the end game on that. However, there are some companies out there that are pretty rich, and it's tough to make a case for.
Okay, well, I'll ask you about those examples in a second, but explain this multiple David Nelson world. Like, what are these AI versions of you doing?
Well, basically, as an analyst, I've got to digest massive amounts of material. Some of it used to take me days and weeks. On an earnings day where I had 5 or 6 companies reporting, that was a rough day for me. Now it's a lot easier. I can take all the transcripts from the calls, dump it into the large language models, and I've got somebody giving me a report. So it's like having 3 or 4 analysts working for me.
Very interesting. So the Mag 7, you gave us your perspective on that group. Looking wider beyond that, are there a couple examples maybe of companies that have had a lot of momentum, a lot of excitement, if you will, amongst the investors who have been targeting them, but you think maybe are less worthy of someone's investment dollars right now?
Less worthy. Yeah, I'll give you some things I took some profits on. It's not that they're bad companies. I think CrowdStrike is a fabulous company. I took profits on that. I happened to catch that, one of the few that I caught at the bottom. Managed to get the run out of that, but it's pretty rich, and I decided to take that capital off the table. Another one I let go was MPWR, a semiconductor stock, fabulous company with a great business model, just had gotten a little too rich. I would say for investors, use this opportunity as a chance to upgrade your portfolio. If you had something that blew up in the last couple of weeks and it's now back to where you bought it, you've been given a gift by the market. Take it, take the win, dump that stock, and upgrade your quality.
But that could be in tech. I mean, it could be in a whole host of sectors.
It could be in anything. It could be in anything. There could be something that you want to get rid of, that you missed it. The market's giving you a second chance.
All right. Great perspective as always, David. Maybe we can book the AI version or one of the AI versions of David Nelson. We can have like a roundtable discussion.
You don't even need me anymore.
Nice to see you. David Nelson, Chief Strategist at
Take care.
Belpointe Asset Management, joining us to talk a little bit about the markets. We're going to take a quick break here.